It's a big pleasure to see you here in Amsterdam and present you the next. I hope my presentation would be there. To talk about actually how blockchain is changing the whole way how we see finance. My name is Pavel Salas. I'm the CEO of TokenBox. At the same time, I'm the CEO and founder of Blockchain Consult, a company that works with blockchain as technology, and TokenBox that works with blockchain as a fintech startup. We're trying to build something, and I will show you later on, that will solve a lot of problems that we're having now in managing our assets. Let's think. Till now, the final industry and how actually people manage their funds, it's in the old-fashioned way. When you give the money, you empower another organization actually to manage it without lack of transparency. You don't know what's happening with that. If you give it to the bank, you will receive such an amount of benefits at the end of the month or the year that nearly will cover the inflation point. If you give it into a money management company or asset management company, you will need to give a huge amount of money without the transparency or understanding where actually this money was invested. So the future challenges of the financial world is actually known by the World Economic Forum is for them. First of all, is actually lack of accessibility. Few people can easily enter into that world. You need to sign a lot of papers, a lot of information. The second one is customer expectations. Few of the organizations really think about what the customer wants. That's why the fintech startups really rise up fast, because we actually go for the customer to what he needs and not otherwise saying that this is what we have, just the customer, you have to obey us, and this is the way. Third way is agility. Nobody wants to work fast. The world is changing really fast, and a lot of that big of organization doesn't look at that. That's why a lot of banks now are partnering with fintech, because they are trying to put their risk on the fintech company, saying, look, if something goes wrong, the problem with the fintech company is not with us. The reputation is still there. But the biggest point that lack of trust is another big thing and big issue. After the 2008 crisis, a lot of financial organizations lost that trust. And this is actually where Bitcoin and the whole idea of blockchain arrives to us. The whole idea was that let's build something where the government cannot really go deep and implement and work with us how he wants. Because we, as people, as a community, can understand and issue our own coin, let's say it like that, where we will give it the value that we consider it should be. There will be full transparency on how much money is there and how it's distributed. This is actually the whole ecosystem that now it's arriving around the blockchain technology, around the whole world of blockchain. We need to understand that now the crypto world is here, and the fiat or our world is there, and there is few intersections between them. So as it's getting much more popular, we need to understand that a lot of projects is working there. And now we can see a lot of terminals, a lot of startups regarding mining. We can see a lot of startups regarding ICOs, and few of them are really working with blockchain as a technology. There is a lot of noise, but not enough money here. Please raise your hand, somebody that heard and knows about what Bitcoin is. Great, it's good, good. And now, how much of them has or ever bought a Bitcoin? The statistics is really good here, because mostly sure when I speak in different conferences, when I ask that question, we can see that just 10% or even less of people that knows what Bitcoin is really has at least a Bitcoin. So okay, or a portion of the Bitcoin. Because in one conference I will ask, like, do you talking about one Bitcoin or a portion of it? So there is a lot of big fees here. We're talking about decentralization, but actually now and getting out a lot of people that would be like intermediate. But we can see that in the crypto world and the intersection between the fiat and crypto world, there's a lot of intermediate people here. A lot of scam arise because of that, because of lack of the transparency between the path of a crypto, where everything is transparent, easy to see, understandable, legible, like a big ledger where you can read everything you want, and the fiat world where actually is not so transparent, and the interpart, the shadow area, because of lack of regulation, because of lack of companies that wants to make it easy, or they're just building that solutions, is make it in gray. How to buy cryptos or how to buy a Bitcoin or an Ethereum? There are three basic ways how you can do it actually. One of them is peer-to-peer transaction. So when you just meet another person, you give him the money, he gives you the Bitcoin. You can do it through local Ethereum, local Bitcoin. Another way is to do it on the exchange, a little bit more sophisticated way. You need more time for that. You need to pass the QIC. The biggest problem with a lot of the exchanges that the QIC you have to pass, it's like it could do 3 to 4 weeks, sometimes even more. And then you have the other option is that you want to benefit about the growing of the cryptocurrencies. You don't want really to have a Bitcoin. You just want to have the value, or let's say the gain that it can gives you during that certain period of time. And then you go into different crypto funds. The 3 points of that is the crypto funds, not regulated. There are several issues there. With the peer-to-peer transactions, it's the most secure way in certain way. It's most anonymous way, but it's the less secure because you never know where this Bitcoin was before, and if it was in some problems, then later on people can come to you. Another thing that we have, the exchanges, the way of lack of trust and different way. So what we decided to do is build one ecosystem that actually can generate everything together. Why not to make the crypto world easy for everybody? Why not to make this exchange between the problems of people with fiat money into the crypto world? So what we did is the next step. We built a platform, or we are building a platform that will allow people to invest into cryptos easily with their fiat money, with a bank account, with a credit card, in an easy way. It can manage and see all the wallets. In the wallets, you will have an additional stage like euro, dollar. We'll put it like crypto euro, crypto dollar that you will be buying there. And you can exchange between them without any problems. A real multi-currency wallet, which you can withdraw any of them to any of the wallets if you want to cold storage them. You will have the option to compare and see the statistics of people that are trading on the platform. That person that's trading good can actually build his own fund with like that. So he's building his whole statistics and he's allowing people to copy or to invest or to trade like he's doing that. With the full transparency of all transactions, if you want and you believe that he's doing good, just copy him. Just invest in his token, buy it, and you will have the same results as he's having. Will allow people to trade by themselves too. You will have the option on your own account to trade by yourself and to copy other people, so that you will have the whole financial ecosystem inside one easy platform. Regulated, fully regulated by Gibraltar and Swiss companies, because we analyzed a lot of regulations. Now we're looking at Malta too, but these two are still allowing people really to get the umbrella of the regulatory thing. This is our roadmap. We are building a lot of things. We are building a lot of features. But the most important thing, like somebody asked, you're talking, what's that? It's 5% of the asset management companies that will have under management, just for the funds. The rest of the people can easily work with the platform without buying the TBX token, using your own money, using if you want cryptos to exchange, with the biggest liquidity on the market, because we will aggregate the biggest exchanges, building something like an OTC broker, but really in a, let's say, like in a platform way. You don't need to call anybody. You can take the maximum that you want from the market. This is our beta version. Will be released at the middle of this year, at the end of Q2, Q3, with the option of already tokenizing the funds, where we believe that people can easily manage all their assets in one easy, interesting way with one platform that would be the same experience on desktop, on mobile, on your phone, and all this closing the gap between the financial institutions and actually your asset management mobile platform. Thanks a lot.
Okay, questions? You're not going to rely on me again, are you? Here we go. Good.
I think I was too good, so everybody understood everything.
No. I've got a couple for you. You're not getting away with that.
Did I see it correctly that you have to have at least 5% TBX in your portfolio if you want to make a fund?
Yes, it's actually the idea of the token is that you are buying like a license for getting the tokenization of the funds. So you will have your money, you will have assets under management, and 5% of that assets under management should be in the TBX token. This is the whole concept or idea, like paying for the license of using it. If the amount of money is going down, you can have less. Like this is the minimum that you will need to have. So obviously, we will recommend to have at least 10% of all the money in TBX tokens.
Any other questions? Okay, my question is, it's about, so you're aggregating lots of things. So exchange functionality, peer-to-peer, and fund. How do you talk us through the reserve capital, the amount of capital you need in reserve to be able to pull this off? Because potentially you could be making something enormous here.
Yes, the point is that when we're talking about aggregating the peer-to-peer transactions, the exchange, and the fund management, there is not all the capital will be on, like, we will have part of the capital on our side, on our cold storaging, so we can match several deals there. But a lot of other capital would be into different exchanges so that we can transact. To get that liquidity, we need to have certain balances to transact there. What we're trying to do now is to have certain agreements with them so that we can have like a waiver of time. So we don't need to put all the money there, but we can reconciliate at the end of the day of the volume that's actually done, so that we can minimize the risks of having all the money on the exchange too.
Okay, so I own an exchange as well. And normally the way it works is that when you make a market, you have to have a certain level of reserve capital freely available, not in cold store. It has to be there to be pulled on. Are you also saying, therefore, that if I come onto your platform and I trade, that I have to put capital in and close my position out on a daily basis?
No, you can maintain your position open. The point is that we're not doing it with leverage. So actually, what are you doing? You're buying an asset, and this asset is actually already yours. You can withdraw it if you want it. So it's just an exchange practically between one class of asset to another. As we're building the fully multi-currency wallet, so actually, if you want, you can take it out. And this asset is already put in under your name.
Okay. Did you get that?
Once
Complicated.
More? Okay.
Complicated.
Okay, let's do it simple. If, let's say, I buy from you, I put into the platform some money, let's say $1,000, and I want to buy an Ether, I go and buy it into the platform. But what we do, let's say I want to transact from the exchange. I have certain amount of Ethers or dollars or Tethers, whatever, on the exchange, and I just buy this Ether on the name of the person and then transfer it to his account. So actually, we're acting like an aggregation of different exchanges.
And are you therefore also a custodian at that point?
In certain point, yes.
Interesting.
We're taking part of the custodian thing, but part of the custodian is delegated to different exchanges.
And how do you ensure against that custodianship?
This is the most tricky part, actually.
I know.
because because this tricky part is actually divided. This risk is divided between us as a technological provider, what we're doing, and between the exchanges with whom we're working.
Okay.
Because part of that would be actually on the technological of the exchange, because part of our capital will be put in there as a custodian for them.
Right.
And we are also working with like type of organizations where we try to make like some like security waiver, so that we will be also insured. It will cost us, but we will be also insured in certain amount of capital for our customers.
Okay. And where are you in your journey? When do you go live for real?
Okay, it will be like a long process delivery, let's say it like that. The first product where we can be really trading already would be delivered in June. The option of making the fund, so you can become a fund, would be done in, I think it will be like October, November. And later on from that, we will be adding more and more features to the platform, making it like more beautiful, more user-friendly. The mobile versions will be done next year, but the platform will be adaptive. So actually, you can do it from your phone without any problems, but from the browser. So all this, but the most, obviously, the most tricky part is not on the front end where the customer can see it. It's on the back end between the API connections with and the exchanges, and actually the whole custodian part of the cryptos.
Yeah, got it. Yeah. Any other questions? Good stuff. Round of applause. Well done.
Thanks a lot. Have a good evening.